What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything related to stocks and investing. Today we're doing a video about billionaire investor Chamath Palihapitiya and some recent controversial stock trades which he made that have cast doubt on his honesty and integrity. Chamath was the OG of the SPAC craze as he organized the Virgin Galactic SPAC all the way back in 2019. He claims his SPACs are a way to democratize venture capital investing by giving individual investors the opportunity to invest in early-stage high-growth companies. Since then, he has also brought Opendoor, Clover Health, and SoFi public. In June of 2021, he registered for 4 new SPACs, which will bring his grand total up to 10 SPACs, which collectively have raised far in excess of $1 billion. The success of his SPACs have been heavily dependent on individual investors buying into them to support their prices and approve the mergers. In this respect, he has benefited tremendously from his presence in both the mainstream media and social media, which he has used heavily over the past year to drive interest in his SPACs. Chamath has made hundreds of millions if not billions of dollars from his SPACs, based on the money he invested as well as the fees and warrants that he collected by sponsoring them. Many of the individual investors who have bought into his SPACs have not done nearly as well. For example, Clover is down more than 20% from the initial SPAC price after it was revealed that the Department of Justice was investigating the company over their business practices. Based on how SPACs are structured, Chamath can make a killing on the fees he collects as a SPAC sponsor, even if the company he takes public ends up doing poorly. The fees differ from SPAC to SPAC, but generally exceed 20% of the invested capital. This problem affects all SPAC sponsors and can cause a perverse incentive to raise as many SPACs as possible, without really caring about the quality of the companies they take public. Whenever you invest in a SPAC, you have to have a high degree of confidence that the SPAC sponsor is competent and honest. In the case of Chamath, some of his recent stock trades cast doubt on his trustworthiness. Chamath has been a long-time believer in Tesla, and as early as 2017 has been a major investor in the company. In January of 2021, he seemed as bullish as ever on Tesla. Here's a clip from a CNBC interview dated January 7, 2021.
Maybe the epitome of all of this is Tesla, which is up 700+% over the last year. I think you're still a shareholder, right? Have you sold any shares? What do you make of that in and of itself? 700% in a year? Elon Musk is now the richest person in the world as of today, passes Jeff Bezos.
Yeah, it's really incredible, actually. I mean, he's somebody I've known for a really long time. I've looked up to him for a long time. And here's what I would say, that he built a great car company, and somewhere along the way, about 5 or 6 years ago, what I thought he was building was an energy company, and that eventually people would realize that climate change actually mattered. And I'm telling you right now, Scott, the big disruption that's coming is to power utilities. There are trillions of dollars of bonds, of capex, of value sitting inside the energy generation infrastructure of the world that is going to go upside down. And when that goes pear-shaped, Tesla will double and triple again. Scott, I don't understand why people are so focused on selling things that work. Let's just, I'll make up a number. Let's just say I owned $1 billion of Tesla stock. If I sold it, now I have $1 billion problem. What do I do with that money? What about if it was 100 million? What about if it was just 10,000? 10 billion? It doesn't matter what the number is. The point is that when things are working, you're paid to stay with people that know what they're doing. And this is a guy who has consistently been one of the most important entrepreneurs in the world. And so why bet against him? When the music's on, you got to dance. And so these guys are dancing. They are in rhythm. They're in flow. Let them do their thing, get behind them, don't sell a share, just let them create value.
At the beginning of the interview, the anchor specifically asked him, "Have you sold any shares?" While Chamath didn't directly answer the question, he said a few key things that we should take note of. Firstly, he said that Tesla will double or triple again. He then says, when things are working, you're paid to stay. This seems to mean that he thinks Tesla is doing a good job and investors will continue to make money if they hold the stock. He says, why bet against Elon Musk? And most pointedly, he specifically says don't sell a share of Tesla. Based on his statements, it's pretty clear the message he is trying to convey. He's saying that Tesla is still a great company and tells the CNBC audience not to sell shares. It doesn't take a genius to read in between the lines and see that he's probably still holding his own position in Tesla stock. You might be surprised to hear that at the same time he was giving these incredible bullish statements about Tesla, he was quietly dumping his entire stake in the company. Here's another CNBC interview from him on September 29, 2021.
It's in a different company.
You still have a sizable stock position in Tesla?
No.
You sold it?
Yeah.
When?
Over the last few years, we've sort of, not last few years, like really in the last year or so particularly, the prices allowed me to, again.
Surprised to hear you say that after what you just said about the company.
Well, I don't have an infinite pool of capital. I'm myself, I don't raise funds, I can't go to other people. And so when I have these ideas, the money has to come from someplace. The only other solution would be for me to get totally levered up. And I'm just not comfortable with that risk. And so, I'm a meager guy with meager means.
Yeah, right.
In September of 2021, he admits that he dumped his entire stake in Tesla over the past year. There's nothing wrong with taking profits, and it's a perfectly reasonable thing to do given how much Tesla stock has increased over the past year. But the problem is that his public statements in January of 2021 completely contradicted what he was actually doing. He said he's been dumping his Tesla shares over the past year, which means he probably started around September of 2020. In January of 2021, he was saying that Tesla would double or triple again, and telling the CNBC audience don't sell a share. But at the same time, he was dumping his own shares. While he never technically lied because he didn't explicitly say that he was selling shares in January, it's pretty clear that his statements were extremely misleading. It would be one thing if his Tesla statements were a one-time honest mistake, but his latest indiscretion is not an isolated incident. Chamath has a history of making double-faced public statements, of which this Tesla incident is just the latest example. His highest profile and perhaps most successful SPAC is Virgin Galactic, which went public in 2019. Chamath said that he was a long-term believer in the company and even became chairman of their board of directors. So it came as a big surprise when he sold 38% of his stake in the company in late 2020. In a YouTube podcast, he said he is still a long-term believer in the company and only sold a small portion of his personal stake to free up money for other investments.
To sell some shares of Virgin Galactic. I saw you tweeted about it and you wanted to be transparent. People asked for you to address it up front on the show, so go ahead.
Yeah, I have a lot of projects that I intend to fund in 2021. I'm probably going to put another, I don't know, I think the forecast was almost $2 billion to work. And I needed to manage my liquidity for this year and make sure that, I could continue to make all those investments and fund all of the other things that I need to do. And that's why I did it.
And you're still a significant shareholder, I assume, and you believe in the company.
Yeah, I mean, I remain completely committed to that business. It would have been better if I could have sold something else, but it's not quite possible. And when when you leave the tax year, you just have to make these decisions to lock in some gains against other losses. And would have loved to have not had to do it, but I needed to manage my liquidity, and so I sold. It's a small portion of what I own.
But a few months later, it was revealed that he dumped the entirety of his personal stake in the company, worth $213 million. Given the strong following he has among individual investors, Chamath's decisions to buy and sell stocks can have a material impact on their share price. For example, after the news of him dumping his Virgin stake, the stock price fell 10%. One of the main reasons individual investors buy into his SPACs is because of his track record as a visionary investor. People want to invest in the same stocks he is invested in for the long term. The problem is, we don't know how long he intends to hold any of his SPACs, and we only know if he decides to dump his holdings after the fact. Some of Chamath's SPACs will do well and others will do poorly, but the only person who's all but guaranteed to profit from them is Chamath himself, because he collects so much in fees. Alright guys, that wraps it up for this video. What do you think about Chamath? Do you think he was double-faced in his Tesla comments? Let us know in the comments section below. If you enjoyed this content, make sure to hit the like button and subscribe so you don't miss future uploads. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.